Good day, traders. Mindset reset. Free cash Thursdays. Today we're talking about pump and dumps and dump and pumps. We had an absolutely, what I would consider to be, I'm a bit shell-shocked to be honest after today. That explosive move on the DJ30 completely caught me off guard. I did not expect that. It went parabolic. Well beyond what I expected. I expected to take out the high and then perhaps peak into yesterday's high of day and maybe fail, but be able to lock in hopefully at least a 50 pip move. But today was an absolutely huge day for several traders on several markets. But first I want to talk about the simple concept of 3 levels of rise, consolidation, dump, 3 levels of drop, consolidation, pump. If it wasn't ever more evident in the charts today, I don't know where it was. I'm still getting questions from traders. Can you do a video on where to get in? 3 session setups are all over. There's a whole playlist on it. That is how you get in. But remember, it's the template that you're trading. So, you know, I'm getting questions from traders. What about the pound? What about this pair? If I don't put a chart up, there might be something there, but I'm not necessarily seeing it, or I'm not even looking. But I want to talk about a couple of instruments that we did put up. One was gold. Now, before we do that, I want to remind people of this very important understanding. Monday, Tuesday, Wednesday, day 1, day 2, day 3. Now, we can get a reset on Wednesday for a continuation of a trend trade or a reversal type scenario into the closing half of the week. Monday's the opening range, Friday's the closing range, Wednesday is the midpoint. Think of it like a mirror image. They might go up and then they might mirror image it on the last half of the week. Pump and dump, or they might pump it up, dump it, and continue the move for a measured move. But Friday is the closing range. So NASDAQ, first red day. S&P, not a first red day, but similar characteristics. And after the open of the first hour, it resembled a first red day, trap volume at the high of the week. And then they proceeded to trade underneath of the previous day's low. NASDAQ traded underneath the previous day's low. DJ30 was the only index that stayed above the previous day's breakout, above the closing price, and it made a higher high in London. It dropped down, it went into consolidation, went up 3 levels, consolidation, higher high, and then it proceeded to dump down into the peak formation low made into the Asian-Europe window. That is the textbook setup. Now, again, I did not expect that explosive move. I'll be the first one to admit that. I was in, it was starting to go, and that completely caught me off guard. It blew right through my profit targets and took me out, and it kept going. But pump, 3 levels, consolidation, dump, 3 levels, consolidation, pump. You can get both. Now, let's talk about gold. Gold, day 1, day 2, Tuesday, inside day Wednesday, that made the low of the day at the end of the US 12 candle window. So think about what they've done. They broke down at the end of the window, made a lower low before going vertical and consolidating and then going parabolic into the open of Thursday, the new day 2, into the Wednesday, Thursday, Friday template to make a vertical move through the high of the week. Now, I want you to go back and study gold. When you go 1, 2, 3 at the high of the week, okay, traders are trying to trade it going up, and it breaks out and then fails and collapses for a measured move down, and traders go, how did you see that? Or what did what was that? Go look at that chart again. That is a textbook gold template. Failed breakout at the high of the week, the high of the month, day 3. But we had news at 8:30, and so they dropped it down prior to the news. I already had the levels on there where the failed breakout was at the high of the week, the failed breakout of the inside day. And I thought they might pump it up and drop it down on news in the first 30 minutes, just kind of break it down and then continue to fall. But it fell prior to the news below 75. Now, it broke down in that first minute and went into consolidation above 50. And my thesis was after 5 minutes that this is going to collapse down and get the inside bar stops. maybe blow off in the first 15 minutes of the second hour. But what happened was they went down and went into consolidation, at which point I cut the trade towards the end of the hour because it went down 3 levels. Go and look at your chart, 75, 50, 50 to 25, and they went into consolidation above 25. 3 levels of drop, consolidation, second hour goes parabolic for a 50 pip move straight up into the lower level shorts. Now, that pin hammer becomes our new reference point because why? Because the thesis is inside day traders, breakout traders at the high of the month, the high of the week are trapped. It went up 1 level, 2 levels, and they're in the 3rd level, which is where I drew the neckline, because now we've got a pump and a possible dump scenario heading into when? The New York Open, which is why I put on there New York Open. Indexes, gold, oil, currencies, 3rd hour New York Open or 3rd hour opportunities. That market went vertically down to get all the longs before pulling back, getting some of the lower level shorts. Still haven't taken out the inside bar stops. Remember, when a market consolidates above a low or below a high without taking it out, it is getting ready for an explosive move. 3rd hour opens straight through the bottom. Plenty of free cash laying on the floor. So if you're not getting any, go back and study. 3 levels of rise, consolidation. 3 levels of drop, consolidation. First red day, first green day. NASDAQ, just before the market opens, it makes a lower low. A lower low. Now that's our anchor point for what? 3 levels of rise and a collapse. Stop hunt into lower level shorts, high day. The breakout low of day level from yesterday, first red day, and a vertical collapse. S&P, very similar. DJ30, parabolic. Parabolic straight through the high. And I want to just emphasize the importance of this. People are saying, oh, but it's already overextended. Overextended is not a best trade setup. That's an opinion. Don't get caught trying to short a market because it's overextended. Last week on the NASDAQ, there were day 3 longs in the market. It went sideways and gave a parabolic move for 50 pips or 75 pips in like 15 minutes. Study the templates. Trade the templates. Somebody said today, today's the first red day on gold. Yeah, but last week we're only away from the high of the month. Trade the templates because you'll miss the trades. Because that's what the retail guy's thinking. Oh, it's still going to keep going. It's in an uptrend. Well, if it's first red day and tomorrow sets up for a first red day, high of session, high of day short, it could go all the way back down. It's week 3. But if it doesn't set up, if it gives me a dump and pump scenario for a long trade back to the high of the week, which it very well could do, then I'm going to hit that if it's a textbook, well-engineered chart for a dump and pump setup. What is that? Go look at the NASDAQ last week. Go look at DJ30. We've had 3-4 days in a row of dump and pump parabolic markets on the indexes. Like, it's incredible. This is almost like it's like they're giving you free money. Now, US Swiss. A couple traders have been tracking that pretty tight. You got your gift today, 3rd hour, where they went parabolic. They went reversal. The Swiss has been consolidating and teasing people down low. Same with the euro. Euro gave first red day. Swiss, I think the US Swiss had a first green day. I'd have to go check that. US yen continued its move back in line with the first green day breakout, back into breakout traders. So we had 3 days of consolidation, 3 higher closes, a breakout pullback, continuation today. Euro first red day. First red day. I put that chart up. Lower low on the inside, and they pumped it up into the collapse. Euro Oz, Pound Oz. Parabolic moves in Asia. Well into a 50 pip move prior to RBA. I think it was RBA or Aussie dollar major red news release. Peeled a large portion of that trade off and let the rest of it just fall through on the news. I left it in. It was a parabolic setup into the catalyst to collapse was the news. What else? We had oil. Oil kept pushing higher. Parabolic We had a first red day yesterday on oil, but you'll notice I drew the line, the low of the day and the close, and that market's kept pushing higher. I don't know what it's done since. It may have dropped, it may have gone up. But tomorrow's Free Cash Friday. So I'm going to just hammer home again the critical nature of understanding what happens, what can happen on a best trade template on a Free Cash Friday. We can get a parabolic reversal into profitable traders. We can get a parabolic continuation trend into profitable traders who are short. So we can get a long trend, we can get a short trend, or we can get a reversal that comes back all the way from day 1, day 2, day 3 on the front side of the move if we've got a dump and pump template or a pump and dump template. But remember, my objective is not to try and trade one instrument every day. I'm looking for the best template that I can most easily recognize. And the most easily recognized templates are ones that have consolidations over the 3 sessions. High of day, dump, consolidation, pump. Low of day, look, so gold, somebody asked me, so you can measure from the low of the day, 3 levels. That's all I'm measuring from is the high of the day or the low of the day. That's it. That's it. So if we've dumped down from yesterday's DJ30 high and went into consolidation and we made a higher high in Asia, a higher high in London, and they've dumped it down into a peak formation low, that's the high of the current day for a 3 levels dump. But if I pump it up 3 levels from the low of gold yesterday, which made the low at the end of the session, 150 pips up, 350 pip boxes, inside bar traders are trapped. Consolidated trap volume up high, they drop it down, they stop hunting into lower level shorts before going vertical. You notice, go and look at this chart, you notice they didn't go back up past yesterday's high of day when they went up on that stop hunt. Why not? Into the upper level of the 100 pip box. Because if they go any higher, it allows breakout traders or traders who are caught up top long to get out of a losing trade. They won't do that. They won't allow losers to get out. What they will do, though, is they'll margin them out and they'll continue to drop. So there's traders trying to buy the low today. Counter trend. They're counter trending a market that is now on the backside of a template, day 1, day 2, and that's how you blow out your trading account. But it's in an uptrend. It's in an uptrend, Stacey. Well, go ahead and buy the uptrend on a failed breakout of an inside day. Study the templates. Week 1, week 2, week 3. I put up all those templates. Pound Aussie, Euro Oz were gifts. We've had a massive, massive week. There's tons of money laying on the floor. 3 levels of rise, consolidation, dump. 3 levels of drop, consolidation, pump. That's it. Pump and dumps. Master the charts. First red day, first green day, inside days. There was money laying on the floor today. There's going to be parabolic free cash on Friday. There's no major red news unless Forex Factory decides to add some more news in between now and then. I haven't seen any. But we've had a big week, traders. Some traders had a couple of challenges early in the week and they've made that up. Today was a gift. There was money laying on the floor. It's not going to change. Nothing's going to change. It's the same stuff. You just got to hunt out the best template on an instrument. And if you're patient and you follow, you only had to take a couple of trades this week and you could have doubled your trading account easily. So understand that if you're trying to trade the move when it gets going and you know, like even with the news, I put a starter in. I'm not worried about trying to load the boat in the middle of the range, but the thesis was it might collapse. So I thought if it collapsed and then they came back second hour before rolling over, I got a piece of that. It went into consolidation. I cut the trade, and then we wait for New York Open. Because why? Second hour, we go parabolic, 3 levels, consolidation, New York Open, collapse. DJ30 drops at 3 levels, like literally 3 levels, 25, 25, 25, consolidation, parabolic. It's all over the place. Gold, 3 levels of rise, 50, 50, and 50. Take out the high of the month, the high of the week. Failed breakout. Guess what? If that collapses, people are caught up high. Somebody was telling me today it's going parabolic long. It's Thursday. It's the high of the month. We got people caught up top. Why would you, if that's you're trying to buy into a falling knife? Don't do that. Euro, first red day. Euro, pound, Aussie, New Zealand. Look at those charts if you're studying gold. There's a similar mirror reflection of gold on those 4 charts. There's always going to be strength and there's always going to be weakness out of the 4 in any order. Today, the pound was already down low. The euro hadn't rolled over yet. There's somebody wanted to buy the pound to go long. Why? Where's the setup? Just because it's down low? Didn't work out? Don't do that. Don't try to buy something because it's down low. Don't try to sell something because it's up high. Look for the trade setup. What is the trade setup? It's a pump and a dump or a dump and a pump, but you need to have a thesis to match up with that if you want to make free cash on those days. Otherwise, it's a session trade. Session scalp, but when you get 3 days of rise and we're up high and you want to buy it higher and the floor gets pulled out, that's called pulling the bids. Lifting the offers, getting everybody up high, and then pull the bids out and the floor falls out. That's why it doesn't come back. That's why it's free cash, because they're not coming back. They're going to clear everybody out. Anyways, massive week. An incredibly massive week. So focus on the pump and the dumps, 3 levels. That's if you do that, that's 90% of it right there. The templates, then stepping back and just recognizing the template, looking for the best template on the day. So you might have a first red day on an instrument, but it doesn't set up right. But you get a perfect 3-level pump and dump on another instrument and it gives you 50 pips. No problem at all. So keep it simple. Master the templates. 1% better every single day. Keep getting better. It's a winnable game. After a while, like some traders are already saying this to me, once you see it, like they don't even see, you can't see anything else. So you're looking at a chart and okay, you're either pumping up for a dump or you're already in a move for the collapse, but timing, levels, behavior, price. Okay, like I said, I'm in the trade, it's up 25 pips. I cut the trade, it went into consolidation, second hour's kicking in, they go vertical. 1 level, 2 level, 3 levels consolidation, second hour, boom, straight up. 1 level, 2 level, 3 levels consolidation, boom, New York open, straight down. End of hour, they pull it back 25, third hour opens, boom, straight down. Everything is timed and measured. Yesterday's closing price. I sound like a broken record? I am. Have a great day, traders, and may the markets go with you.